Thank you for joining us at xam.com. This is the Weekly Outlook. I'm Christina Marujos. With me today is lead investment analyst Rafi Boyajian. Now, attention is shifting to economic data this upcoming week, Rafi, as investors are seeking clues as to how the recovery is progressing. Let's start by having a look at the United States. We have retail sales coming up on Tuesday. It looks like this report will gather a lot of attention, especially after the scorching hot CPI numbers we got earlier this week. What are we likely to see in the report, and can the retail sales numbers further fuel the dollar rally?
So, Christina, after those shock CPI numbers, the focus will swiftly move on to the retail sales data, like you said. Now we're expecting month-on-month growth of 0.7%. This would be the same pace as in September, and it would suggest that the fourth quarter got off to a solid start. And as well as confirm that the US economy is once again firing on all cylinders, because over the summer we did get quite a bit of patchy data, and now we're seeing some more reassuring momentum in both the labor market and in consumption. There's also going to be a number of manufacturing gauges. So if overall we get another encouraging set of data, they would likely push Treasury yields even higher from the levels they reached this week, and also boost the US dollar, which did climb to 16-month highs against the basket of currencies following that strong inflation data.
And now let's turn to the United Kingdom, because the pound came under pressure after the Bank of England disappointed markets by not raising rates, but we might see it have some opportunities this upcoming week to gain some footing. We have jobs numbers on Tuesday, inflation numbers for October on Wednesday, followed by retail sales on Friday. Of course, all of these reports are going to keep investors busy. What is the data likely to reflect in regards of the recovery? And can the pound find some much needed support?
Well, each of the data will be quite important for the pound, because they could determine whether the Bank of England hikes rates in December or waits until February. Now, the UK jobs market has been pretty strong lately, but one of the reasons that worried the Bank of England at its November meeting is that they wanted to see the impact the end of the government's furlough scheme would have on the labor market. So we will get to see from the September employment numbers if there was a big drop in the number of people in work as a result of that. Moving on to the inflation data, forecasts indicate that CPI could jump to almost 4% in October. So that would definitely be of concern for policymakers, especially if there's an upside surprise. But what could take the heat out of rate hike expectations, however, is the retail sales data we've got coming up on Friday, because they've been quite sluggish lately. And although we're expecting month-on-month rebound of about 0.3%, that wouldn't be enough to allay worries about slowing economic growth in the UK. But as for the pound, the overall risks are nevertheless slightly to the upside from the data. But of course, whether the pound can rebound against the US dollar will probably depend on how strong, not just on the UK data, but how strong the US data is.
And before I let you go, Rafi, do we have anything else on this upcoming week's calendar that investors should be on the lookout for?
Well, indeed, we do, because we've got a number of CPI numbers coming up. So let's have a look at Canada and Japan. So Canada's inflation print could be quite significant for the loonie, because the Bank of Canada is seen as one of the few central banks that is least likely to disappoint market expectations of rate hikes. On the other hand, for Japan, the core CPI data that's due next week is expected to stay at 0.1%, which would only underscore the fact that the BOJ will probably be the last central bank to normalize policy, so quite a variation there. And again, sticking with the inflation theme, investors will also be keeping an eye on the RBNZ's quarterly business survey that's due out on Thursday. Now, this report is significant because it contains business expectations of inflation, which the RBNZ does watch quite closely. So if you were to see a surge in inflation expectations from the survey, that would boost the odds of the RBNZ raising rates by a more aggressive 50 basis points when it meets later this month, and that will also, we could also see some gains for the Kiwi as well.
Rafi, it was great having you with me today. This was the Weekly Outlook here at xam.com.